On that note, let me go across and introduce our guest for the day, Mr. Sunil Shah, who is the co-founder at Turtle Star Portfolio Managers. Good afternoon, Sunil. So what have you made of this recent rally that we've had on the cards? Do you think that it is just a technical bounce back and we could be headed to lower levels? Or do you assume that an intermediate bottom has been placed by the markets?
I seem to have lost you. Sorry, Jash, cannot get you there.
So let me ask you that again. What have you made of the recent rally in the market? Do you think that we have put an intermediate bottom in place, or do you think that this is just a technical bounce back before we resume the downside that has started in the month of October?
Yeah, Jayesh, so clearly, market is something which has always been volatile. Now, I'll just share one data point that if we see the markets in the last 14 years, every year the fluctuation of Sensex itself is on an average about 40%. So if the difference between the high and low on an average is 40%, that is the kind of way in which market fluctuates. And there are reasons. So every time there will be reason for the market to either go up or go down. So as we step in the near future, meaning in 2022, the factors which would really be very, very important could be the IPO of LIC, for instance, or the budget announcements which will come in the month of February, or the UP election. So if I look at it from the next 100 days to 3 to 4 months kind of a period, I think these three events are going to be extremely critical, which will decide the momentum or the zone of the market. And as we step further into the year, I think it is going to be more about the liquidity, the tapering, and the way in which the policy stance is taken from the central bankers world over, whether they want to tame down inflation or pursue growth. So all those factors will decide the course of the markets. Having stated that it is very, very natural for the market to be volatile, so up and down persist. As it happened in 2020 when COVID came in, market really panicked, and from those levels we have seen a huge run up of about 87% in 2020 itself. So market will be like that. However, there will be pockets of opportunities. So we need to be more of a stock specific or sector specific, because it will be a seesaw movement which will be there. And if we are able to identify the right sector, yes, there will be a lot of money which can be made. And at the same time, if we end up on the wrong side, I think we end up not generating that kind of return. So it will be a stock pickers market in the year coming forward. I think that's the sense which I get, Jayesh, at this point in time about the way ahead.
Let me just pick up on that, the last statement which you made, that it's going to be stock specific. So, A, are you saying that, it will not be as easy to make money as it was in 2021? And B, what are the key themes that you are bullish going into the new year 2022, along with the fact that, the reasons that you have mentioned, of course, early January will also be the start of the earning season. So, given that, what are the themes that you're watching out for in the new year?
Yeah, so I would try to look at sectors or themes where companies or sectors have got pricing power. So if we see the entire year of 2021, it was the metal pack and the chemical sector. Both of these companies had tremendous pricing power of their product. It was largely driven by the shock of supply chain at the global level. And because they had pricing power, they could generate huge amount of profits. So the question that I ask myself is, which sector will have pricing power in 2022? And the thought there is, it's the telecom sector. Now, telecom sector, we have seen that most of the companies have done tariff hike, and with the tariff hike, the market has really not come down in terms of the size of the market. Actually, telecom is now a necessity in our life now. So with the possibility or probability of further hikes coming in 2022, those companies will enjoy and make similar profits like what metals and chemicals made in 2021. So I think that is one space, that is one area. Again, in telecom sector, we have seen huge consolidation over the last 5, 7 years. So if we just go back 5, 7 years, there were about 25 to 30 players. And as we speak right now, if we count the top four, more than 95% of the market share is there between the top four players. So I think telecom is the sector where one has to be very, very upbeat about, or I think that sector will outperform. The second sector which I think will do well is going to be the IT space. Now, IT is now migrating in terms of its journey upwards in the business curve. What I'm trying to say is that new products of artificial intelligence or cyber security, all these products which are essential in this our lifestyle nowadays, is where IT will generate huge amount of profits and higher margins as well. So the negative in IT is the manpower cost which has gone up, but the higher possibility is the ability for them to really garner better business and earn margin. So telecom and IT will be the space which I'll watch out for. That's the theme I'll play. And on the flip side, I'll be watchful on the metals and chemicals because there we've seen a huge run up which has already come in. Jayesh, that's the thought process as I step into this next year.
Sunil, let me also just ask you, you mentioned metals and chemicals which had tremendous pricing power during the last year, and you are not so upbeat on these two names, going into 2022. Is it fair to assume that you are of the opinion that they no longer enjoy the pricing power, and that is the reason they will not be in the limelight during the course of the next year?
Yeah. Jayesh, it is always a relative concept. Now, when we say the companies will have not great pricing power, we have to see in context with how much of the potential upside is already built in the stock prices. So chemicals as a sector was maybe less than, overall, if I look at the total market cap of all chemical companies put together, somewhere in 2018-19, it would be less than, let's say, 1 lakh crores. And as we speak right now, the total consolidated market cap is upwards of 4 lakh crores. So whether at 4 lakh crores, if there is a kind of, concern on their pricing ability, will the market give them the thumbs up which they had given in 2021? Maybe my answer is no for that. So if I have to really be there and be in that on a treadmill to kind of keep on outperforming the markets and be at pockets where, maximum profit is going to be there, then in that case, I think I would be underweight on the metals and chemicals. So the thought process is that we have to see in a relative context about what has already been built in the price versus how much can be the profit potential from here on. So that's the thought process over there.
Sunil, owing to the time constraints, we'll have to leave it here as much as we wanted to extend the discussion. But thanks for taking the time out and speaking with ETNOW. That was Mr. Sunil Shah, upbeat on telecom, IT, capital goods, and expecting metals and chemical sectors to underperform going into 2022. Quick check on the market: 170 odd points. 125 odd points, sorry for that, up on the Nifty. But it's time for a short break on this edition of the newsroom. On the other side, many more stock specific discussions.